All right, good morning, good afternoon. Welcome. Thank you so much. This is Trendy from Simpler Trading. We are going to do our weekly broad market analysis. This should be pretty quick. Again, thank you so much for tuning in. Don't forget to hit the like and make sure you subscribe. You'll get this video every week. Every once in a blue moon, I may not do this because I'm traveling out of country or something like that. But you can be sure that I'm going to go over the same thing every single week. And if you guys have any questions, please drop those. I would love to answer those if I get the time. And if you appreciate this, again, please hit the like, share with your family and friends. Come and hang out with us at Simpler Trading. Check out the Trendy Room. There's a reason why we're all the rage. I mean, we are hitting great win percentages. Melissa just doubled her account for the sixth time in just under 2 years, probably more like a year and a half. We did our webinar several weeks ago. After that webinar, we did a basically like a consistency, confidence challenge, if you will. We didn't want to put a number on it and say, "Hey, we'll make your account go from 10,000 to 100 grand" or anything like that. But we did get up to, I think, plus 80% or so of that challenge. So, great results, great methodology here. It's all about supply and demand, but I also give you like a twist and a turn on how to look at Fibonacci, how to identify supply and demand. So basically, what we're doing is we're identifying those bigger levels where institutions are buying and selling, and we're aligning ourselves with that. When price gets there, whether it's by a catalyst in the market or whether it's just kind of a slow move into those levels, I prepare you how to take those trades. And that's what it's all about. That's what our community is all about. So I hope to see you there. Now, let's go ahead and start with this week's major U.S. economic reports and Fed speakers. So we are coming into the 4th of July. I still need to check my calendar. I have no idea if the market's open on the 4th or not. But what I do know is when I look on here, there's nothing scheduled. It is a holiday. So I believe most likely the market is closed and you may have some futures early in the morning and then it may shut down. I'll look here in a few minutes. So Monday, July the 1st, S&P final U.S. manufacturing PMI, construction spending, ISM manufacturing. All of these things over here that I'm talking about are catalysts that push price into supply and demand. That's what gives us the edge at trendy trading. We are identifying supply and demand, and then these catalysts are pushing price into there. We wait for price to get there, then we execute with our team. On Tuesday, July 2nd, we have Federal Reserve Jerome Powell speech in Portugal. I don't know what he's talking about, but typically when the guy speaks, we get a little bit of volatility in the market. These are Eastern time, so be aware. This is literally on Tuesday, right when the market opens. So this should be interesting. Right when the market opens, he is speaking. Then over here at 10 o'clock, we have job openings, and then to be auto sales are coming in as well. And then Wednesday, July 3rd, New York Fed president. So basically, we have a Fed head speaking. ADP employment, initial jobless claims looking like Wednesday's probably most likely going to be the busiest day with economic data. U.S. trade deficit, S&P final U.S. PMI, factory orders, ISM, minutes of the Fed June FOMC meeting. So Wednesday really looks like the most fun that we could see in the market. And then Thursday, again, getting ready for that 4th of July holiday. And then on Friday, it looks like we're back to business. But, a lot of times what I'll notice with these short weeks is that, people are trying to have a good time, and most likely they're traveling. And if they're traveling, then Friday could be a pretty boring day. But again, nothing's concrete. Anything can happen. But just know my favorite weeks have 5 days in them. I'm not a huge fan of short weeks. They tend to be a little choppy. Matter of fact, I'll talk a little bit later. I kind of feel like it's a call credit spread type of week until proven otherwise. And I'll show you some charts here shortly. Okay. All right, moving on down, we have earning whispers that I use here on X. As you guys can see, things are getting really quiet, quiet before the storm, if you will. We have presidential elections going on. It's an election year. The market's been on fire, 3 quarters up in a row. I mean, there's a lot to be thankful for. It's been, a fun year, but it's a little quiet going into this week. And then after that, I think we start getting ready for banks and so forth to start reporting. So it should be fun. And Tesla, right? Tesla's out there on the 17th of July. I can't believe that I'm saying that it's July already. Almost, 7 months into the year, guys. This is absolutely insane. And as I said in the room, we'll be doing a happy hour after I get back from my next vacation. So talking about that just on a personal note, I was supposed to be gone starting basically this weekend until like the 16th of July, but I canceled my trip over to Europe and decided to stay here. And I'm going to head out to Italy next year in July for a wedding. So I put the trip off and decided instead of taking, 2 weeks off, what I'm actually going to do is be here this week. And then going into this coming weekend, I'm going to take off. We're going to head to the Biltmore in Asheville and hang out there for a good week and then go over to Wrightsville. But it's only going to be a week. So I'll be gone for next week, not this coming week. All right. So just want to make sure I get that out there so you understand. And of course, Melissa will be here in the room having a good old time with you. And then when I come back, she's actually taking a little bit of leave. All right. So again, a lot of stuff going on. It's summertime. The market's been strong. And again, presidential elections, it just really feels like a great opportunity for the market to start to get a little volatile, a little choppy, and perhaps the market's not as easy as it has been, right? This is where it'll really start to show through whether the process you're using, if you're not using supply and demand, actually like stands, where it needs to stand when the market gets a little bit more difficult. That's where I love to trade. I love to show that supply and demand is great for all conditions in the market. So I hope to see something a little bit different for us. The SPY and QQQ neutral strategy, as I said last week, I'm no longer doing that here, but I have thought of some ideas. One of those that I want to share with you is the idea of not incorporating it into this broad market analysis because honestly, that's where the most time for me comes from is putting those charts together. And as I said before, it's a super popular strategy, but it's taking up a little bit of my time for this specific video. So I was thinking over the week, if you guys didn't hear me, and if you love this idea, again, hit like on this and comment in the comment section of this video and tell me what you think. But I'm thinking we could do a SPY and QQQ neutral strategy live. All right, I don't have the date and time yet, but do this weekly where I basically turn on YouTube. You come in and watch. I'll explain exactly what's going through my mind, why I'm choosing the levels I do instead of just giving them to you. So basically, every week would be this learning opportunity for you to learn how I put these together, right? And see how the thinking changes weekly because the broad market analysis, sorry, the SPY and QQQ neutral strategy is not concrete. If it was, I would have already developed an indicator for it. So you do have to put a little bit of thinking behind it. And I think it'd be more beneficial and actually kind of fun. It's almost like teaching a class and I love teaching with you guys there live and you can comment and say, oh, well, that's cool, but why did you do this? Or, this type of stuff. So, anyways, look forward to that. Again, I probably won't start thinking about that until the week I get back from North Carolina. So, look forward to that, but I need enough comments and enough support to say, yeah, John, I love that idea. If I don't really hear that, then I'm just not going to do it. All right, no big deal. All right, let's go ahead and move on. We're going to use TradingView for this. We're going to get into SPY, the bigger picture. Basically, what I want to note here is the fact that we closed out the quarter. All right. So we close out the quarter. What that means is every candle on this chart I'm using, here on TradingView is 3M, 3 months, a quarter. Every one of these represents one quarter. Now we closed up just like we expected, 3 quarters up. That's called three white soldiers. It's a very bullish move and it looks great. What I'd be more interested in is, after the three white soldiers, what is the probability of another quarter? If any of you guys have these kind of stats, I'd love to hear that in the comments. What is the probabilities of the fourth quarter closing up as well? Now, back when we were in Las Vegas, I did a panel, with John and some of the team here at Simpler. and I made a comment that this entire year would be up, meaning like every candle for the monthly would look amazing. I was kind of joking, but it's starting to look that way. But we still have a long ways to go, folks. All right, we still have a long ways to go. So, I don't want to be overly bullish here, but things look great, but things also look extended. Let's just take it quarter by quarter when it comes to this chart. All right, when it comes to this chart. So everything that I'm talking about on this chart, you have to be a more of a long-term swing trader. So the levels that I talk about, the things I talk about, you have to let the quarter play out. You can't go one week into this and go, oh well, price moved down and broke this spot, so therefore the quarter chart is broken. When I look at this quarter chart, this cloud says it all. You guys know that it's been like this for many years. Anytime price comes into the quarterly trendy cloud, it's time to buy, and it's going to be that way until we close underneath here. That's just how it's going to be. So this thing is support until proven otherwise. We've hit some Fibonacci extension targets. That's what these are over here on the right hand side. We've hit that. We pulled back, but we are supported from a mid-term type of support would be 516 by 496, and long-term support for 2024 we have what's called an inside and up formation. This is what I teach on. That's what this guy right here is, and you can see that it's confluent with the cloud. If for some reason the elections have a significant pullback, kind of like when Trump was elected that time and it was a huge buying opportunity, for some reason, let's just say, I don't know who's going to be elected, to be quite honest with you. Uh, it doesn't matter to me. I'm following the levels. But if for some reason we get one of these deep pullbacks and they're, having you believe as a retail trader that, the decision is going to crash things, I want you to remember these levels. This is where I want to be looking to start getting long term. Okay. Now, considering this last quarter, again, super bullish. I don't have a whole lot to talk about on it, but what I will say is a fresh new quarter starts. The quarter closed strong, but the week was flat to down with a topping wick. All right, so if you go to a weekly chart, you're going to see that. And it's telling me there's a little bit of sell-in pressure up here, and that makes sense to me. There's a couple scenarios here. What if we kind of top out here, sideways to down? We start to build up for our next earnings, meaning banks, Tesla, then all our tech stocks. We get right back into the swing of things. So, will we get a dip buying opportunity into the next earnings? Or do we continue to make those moves higher above, the previous week's high? Do we continue to move there? And we'll talk about that scenario when we get into the ES futures and the NASDAQ futures, okay? But for right now, guys, you see your support, your long-term support, okay, again, mid support, and you have Fibonacci extensions here to the upside. I also like the idea of selling credit this week, all right, around those highs of last week and the week before. Selling credit around there doesn't mean I'm going to do it. So please don't say, well, this is what he did. You'll know, but the thing is like I like the idea right now. Okay, of selling credit and doing it if this and that. If price breaks above and holds above, then I can let go of that credit spread. I can buy back the short side and then go long. But for right now, we have a high. We have some demand zones below. I'll show you here in a minute where we want to go long. All right. So it's like if it gets above there, cool. Then, we continue higher and I'll get rid of the credit spreads. If for some reason we don't go higher, I collect my premium on the credit and I wait for price to come down into a demand zone and then I go long. All right. So again, anything between is just really noise and that choppiness that, I would see happening into a short week. All right. Also, if you're thinking about, some sort of puts or maybe protection, what I'd be doing is targeting several weeks out, 539 by 530. Those are my levels. So you can do put debits. You could buy straight up out of the money. You could trade. The idea of what I pay is my risk, knowing that the market's super strong and you're kind of counter trending, right? When you're saying, well, I see some topping wicks, I think price can come down. That counter trend trade. One of my favorites is to do put debits because they don't cost a lot of money and you can get a nice return. Or you just go a little bit out of the money and you say to yourself, If it doesn't work out, that's okay. I'm just, investing 500 bucks into this idea, right? Hypotheticals. Okay. Anyways, let's go ahead and move on. We'll go into the QQQ, do the same thing here, and take a look at the bigger picture. All right, so on QQQ, this is the quarterly, looks great as well. It really, at the end of the day, guys, is the same exact thing. We've been talking about this for weeks, months, actually. I've been telling you that I was looking for the three white soldiers. That's exactly what happened there. Here's all our notes from the past. New quarters upon us. Overall, this was a great close for the Qs. Strength continues above 478 and under 478 there could be selling into 472 and 462. So again, this is the same scenario as I was showing you on the SPY. On the weekly, we have some topping wicks. It's kind of sideways action for the last 2 weeks. Not very impressive, but overall, the bigger picture is impressive. Far as mid support, you're looking at 452 by 431. And then long term support, if anything big happens in the market for this election year, this is where I want to be buying right around this inside and up formation. So again, keep your eyes on this formation just in case something happens. All right. So let's go ahead and move on. I don't want to spend too much time on this. Things look great, and we're starting a new quarter. All right. Coming on down, we're going to take a look at the dollar, the DXY. Why is this so important? I mean, it really is pretty straightforward. When the dollar is showing strength and things are moving up, typically the market is moving down. And when the dollar is breaking down, it's looking like, the market continues to move higher. Now, on the quarterly, I mentioned this several months ago, and I want to just kind of update you here. This is a very so far is looking like a bullish pattern to the upside. So it worries me a little bit. Um, Also because we've hit supply one, two, three times. It The more it hits, the weaker it can become. And if this candle turns into three white soldiers, one, two, three, then we could be in for some volatility, some shakiness in the market. So I don't want you to lose sight of this. And I don't want you to lose sight of the bigger inside and out formations I was just talking about on the SPY and QQQ. These things are very important. It's typical that at least in my trading journey that we have once or twice a year where we have big moves that are great buying opportunities. We haven't seen that this year. Not in my opinion. There's not been any sort of significant pullback. It doesn't mean it has to happen, but I need you to understand why. If it does happen, I think it comes and stems from here. The quarterly on the dollar is starting to look pretty bullish. Now, when I break this down, usually from a week to week perspective, we've been using the same blueprint this entire time for over a year now, and it's worked really well. It helped us get long in October when I was in Orlando for the money show. We talked about getting bullish. That worked out very, very well. I told you not to be too concerned when the dollar was moving up here towards supply. I said, look for the rejection. That's exactly what happened. The market started to pick up and get more momentum again. But here we are on the weekly, right? And in the back of your head, you're thinking about that quarterly I just showed you. And there's just a couple things I want to note. So you are making lower highs so far, okay? But you're making higher lows. And when we do this, this is called a sideways trend. See, if we match these and do this, then you're basically creating this wedge here. And a lot of times from a wedge, a lot of technical traders who are using shapes and so forth, they're looking for that breakout. All right. And then below this, they're looking for that breakdown. No matter what, it's always thrown me for a loop when I first started trading without supply and demand. I would try to, get into breakouts above this, and then I would get hammered. I would try to get into shorts, and then price would go right back up. So I prefer supply and demand always, but I want you to also understand that there is some building going on in this chart. Like it's building up for something. All right. And something big is going to happen. It's just a matter of time. Timing is the variable. All right. Far as this week is concerned, though, price is neutral as we near the supply once again. And that's going to be this red box. just take into consideration it's been tested. Caution above 106.55. And if the dollar drops below 105.25, then bulls stay in charge in the market. When I say bulls stay in charge, I'm not talking about the dollar. I'm basing it conditionally off the dollar and saying that the market continues to rip to the upside. Okay. So again, under 105. So we're basically in a neutral state here. And again, it makes sense going into earnings and it makes sense going into a short week. Okay. All right, so the next thing that I want to take a look at is the 10-year treasury. Let's go over into the TNX. I don't have a whole lot to talk about here, but I did want to show you from a weekly standpoint. We did come into the demand zone. Price did go bid, right? It went higher from this level. That's what we expected. And when price starts to go a little bit higher from here, we start to pucker up a little bit. We start to get cautious. That dollar's going up. We've got topping wicks on the ES, the Nasdaq, the SPY, the QQQ. It's telling us, hey, take some profits, have fun. And matter of fact, guys, I had a really good week last week. I wasn't expecting that. I really wasn't. I didn't see a ton of opportunity, to do well, but I did really well. And looking back, I'm like, wow, what an amazing week. So, anything can happen. That's why I try not to get overly biased. It's really important to have if this, then that type of attitude. If price comes into a demand zone, we look to go long. If price is a supply zone, we pull those stops up and we take some credit. You know what I mean? So, or profits, whatever you want to say. But this is just telling me there's a little bit of caution that you need to be looking at. And what I would like to see is, sure, it is building, by the way, another inside and up formation right there, but it is pushing into an area where we could reject, just like the dollar is. So again, it's going to be patience into Monday. Kind of like give us an idea what you want to do. Maybe it's going to set the stage for Jerome on Tuesday when he speaks, right when the market opens, and then Wednesday for those minutes to drop and so forth. So just keep that in mind. Monday might be more of a be patient, maybe sell some credit. I could be totally wrong, but that's my thinking as of right now. All right. Again, TNX, not too worried unless we start to break above the cloud here, which is around 4.37. And if it continues to break down, then we just kind of go sideways here on the 10-year treasury. Okay. Now let's talk about the skew. All right, you guys know the skew is my baby. I love it. It really does tell me a whole lot. This week, it closed out, and you always want to look at the skew on a weekly chart, not like a daily or anything like that. This is at 141.79. You guys can see I've talked about this a million times, but just in case you haven't heard me say it before, back in 2021, I was part of a group where basically the moderator was, always bearish, and I get it, and I felt that bearishness, and I fell into that trap, and price just kept going up and up and up, and I was a little pissed off. I'm like, man, I feel like I'm being not only drawn into or sucked into this negativity that the market has to go down, but one thing that I didn't want to happen again is to fall right back into that same way of thinking. So, really early within this levels here, I decided that, hey, we got to come up with new levels because this is what happened in 21, and I don't want that to happen again. Basically, we had a melt up. And every time, the skew was up here, we were looking for some sort of crash in the market or some kind of pullback, but that wasn't the case. We stayed in a really defined area. Now, history, right? We were always saying basically up here, be cautious, risk is off. And then down here, history showed, and when I say history, we're talking about all the way back here, looking at this data. This is where most retail traders like yourself and everyone else are super scared, and it actually turns into a higher probability that it's the best to have risk on. It just was timing was the variable. So you wanted to wait, 60 to 90 days when everybody's scared, you're buying these options for cheap, and then boom, the market takes off. Well, in 2021, they did things a little bit differently. Well, guess what? They're copying the same sort of strategy. In 2023, 24, we've been in this zone for over a year. And so I changed things up. And basically, when we get up here, we want to be cautious. And all those things that I was showing you with the dollar, the TNX, the top and wicks, it is reason to be cautious. Okay. And as the market is getting more cautious, the skew starts dropping. Okay. Now, in 2024, every time that it's come down to this level, it's been a great opportunity to buy 5 to 10 days out on the SPY calls, which is really opposite of the old days. All right. But this year it has worked. And I keep saying this over and over. I'm going to keep trying it and doing it until it stops working. Okay. There's going to be, listen to me, there's going to be this time that you're going to listen to me and it's worked for a year and then you're finally going to try it and it's not going to work. That's why allocation is so important. All right. So always be comfortable with what you're trading because, at some point, this idea is not going to work. The market's going to continue to go down. Those calls aren't going to work. And that's okay. All right. But for right now, as long as we come into here, I like the idea of 5 to 10 days. Now, believe me, the way that we get here is that the market continues to pull back. More fear comes into the market. We're going to hit here. And right at this crucial point, and it's happened the whole entire year, is right when we all think, okay, this is actually going to be the bigger pullback, 2 to 4%, somewhere in there, that we're not really seeing. So just remember that. It's not easy to buy when the market's going down. All right. Now, down here is the extreme. I was really hoping to see that this year, and we could still see it again. It's only, we're just 7 months in. If we get down here, this is where I personally like to buy. But again, I'm kind of, in this box for this year until I'm proven otherwise. Okay. So, anyways, that's the skew. It is, it was at the cautious level a couple weeks ago. Market's pulling back a little bit. I'd say more sideways to down. Okay. All right, moving on down, the Fear and Greed Index. This is really important as well. We like to talk about this every single week. You can read about this. You just go to CNN.com, Markets, Fear and Greed. Use this link, it's free. And you can watch a video. It'll teach you like what it's taken into consideration. It's actually pretty cool. Safe haven demand, junk bond demand, market volatility, put and call options. Your P call, stock price breadth, all that type of stuff. If you like to look at that, and then they come up with this number. I just like to look at it as the majority of participants at the moment are a little fearful, but also weighing right into the neutral. People don't know what's going on. Like it's election year, market's melting up. I don't know what to think. I'm sure many people are like waiting for the big drop, but also other people are like, man, it seems like every stock I get into is not moving. So there's like a select group of names that are doing really, really well, popular names and so forth. But there's also a lot of names that haven't even, in my opinion, got going this year. Like Tesla. Tesla's not done anything. It's had maybe 1 or 2 weeks this year that have been decent. And matter of fact, I sold, I sold when we hit the 200 mark. That's what I was looking for. And I didn't sell it all. Sorry, I only sold some. I sold a nice chunk. But yeah, here's the truth of the matter, guys. I bought in the beginning of the year at 193, and then I bought some more on a dip, and then I held for almost a half a year just for my shares to get to 200. I mean, geez, you talk about performance. That's pretty crappy. All right, so a lot of names still haven't even broken out. So if some of these, you know, names that we're used to actually start to break out, then the market can definitely, continue to melt up. But right now, people are a little neutral. They're not sure what's going on, but understand we're coming into, uh, we're going to have these events, going into the election year that are going to cause some volatility. Okay. All right, so that's what I have right there on fear and greed. And then our next line of information that I want to talk about is going to be the futures. This is my favorite part about doing this because if you don't know this about me, I trade based off, so I trade futures, I trade options, I trade equity. All of that is right here in the room. I do long term leap trades and options, I do long term equity trades. I do short term. Melissa does short term. She does midterm. There's a lot of stuff. We do it all. All right. But the ES and the NASDAQ are my baby. Like I have been doing this since it's been a long time. And I just understand how to read the market by just looking at the futures. I've always said, you know, learning the futures gives me an eye into the future. And I really mean that. And I do it by using structure, supply and demand, Fibonacci's, and so forth. So just, listen through this ES and NASDAQ. And if you don't trade futures, that's okay. All right. You can use this ES futures to trade SPY and SPX, and you can use the NASDAQ to trade the NDX and the QQQ. And then look at your top, weighted names in these, and you'll understand that you just need these charts to understand what's going to happen with your favorite names and so forth. So on the ES futures, this is what I have. Same chart as last week. These are the top and wicks that I talked about. I threw some Fibonacci on here. I placed and anchored my coefficients from this candle to the top here, and that's where we come up with these numbers here. Those are your coefficients. And what I'm going to tell you right here is this. It's if this, then that. If price takes out the previous weekly high, we continue up. Very straightforward sentence. If price pulls back, then we try to buy at demand. Everything between is digestion and chop into this short week. Inside week. That's what happened this past week. What do I mean by that? This is the body. This is the body of this candle. I use what's called hollow candles. The hollow candle and filled candles. So the hollow candle closes at the top. The filled candle, which is this, closes at the bottom. If we go to a whiteboard, all this is like whether you got a wick or not, this is the body. We do not include the wicks when we talk about the body. Okay. The next candle has to close within the body, not the wicks. It has to close within the body. When it closes within the previous candle's body, it is an inside. This is what we've been teaching for many, many, many years. Okay. So this guy closed within this body. This is an inside week, and we know that here at Trendy, we talk about inside and up versus inside and down. Know those levels, know how to react, okay? Couple other things that I want to point out. The 9 EMA is confluent with the 38.2. This and the 23.6 will be a target if the bulls lose their momentum. How do we know they lose their momentum? They pop up, but they can't make a new high. It fades into the next day. It makes a new low. Then we start to look for these levels that I'm talking about to the downside. Okay. And again, we'll show you that every single day. All right. You will also notice that the double inside and up formation, so I'm talking about these, inside, inside, and boom, we got the up, so that's our demand zone, is also confluent with the 23.6, or sorry, the 38.2, all the way down into the 618. Okay? So a lot of confluence in this green box. If for some reason we get a setback or some digestion into the next earnings season. Okay? So again, very, very key levels. What I would tell you are going to be right here around 5,444. And then for some reason we break below that, I'm a buyer at 53.88 all the way into 52.27. I understand it's wide, but we look for certain things that pop up on our lower time frames to get long and so forth. And if you want to learn about it, come on in. It's like $7 for a trial. Okay. Anyways, let's go to the next chart. This is going to be your daily. I did not change the levels. These are the same levels as last week. So that's very rare, but price didn't do anything. We have two top and wicks. We hit the resistance, the same resistance I gave you last week. Price pulled back. We have some topping wicks there, but do notice bulls do have a fighting chance as they came in at the 9 EMA. So we could see a pop here on tonight's open in the futures, which is here Central Time, 5 o'clock, 6 o'clock Eastern Time. And yeah, so that's what we'd be looking for on the open as a potential bounce here. But if we can't get over these highs, remember, I keep talking about if this and that, we're going to have to build upon here. So I'd like to see a day close above there. And then let's say let's just do it by days. Monday, we close above there. Tuesday, we base above there. And then on Wednesday, we actually get, I think Wednesday's the 4th, though. Let me just double check here. No, it's the 3rd. Sorry. So Monday above, Tuesday inside, and then Wednesday a push up and a higher high. So it would look like, I just want to see a base is what I'm saying above there in order for me to feel confident we continue to the upside. Okay. Now, if we can't, if we bounce, right, and we come right back up to here, but then reject and again make a lower low, then I do believe we head down lower on those weekly levels that I just shared with you. Okay. Next thing that I want to go over is going to be the 4 hour. All right, so I'm just going to click right there. This is the same chart as last week. You can see our levels work really well. We came into the 220-minute supply. From there, you would expect the market to pull back. That's what we teach. Market did pull back. It came back into the 30-minute zone. Then it went bid. So we stayed in the zones on the 4 hour charts. I'm going to leave these here. Same exact chart as last week. Nothing to do here. I want to show you the nice proof of concept. Again, if we break down below those levels, then I do believe we're headed down here into this sort of like a gap fill and an inside and up formation there on the 4 hour. Okay. Next thing I want to show you is the NASDAQ futures. Let's go over here. We'll come over to the weekly, just like we did on the ES. Same thing here on the NASDAQ futures, if this, then that. Overall sentiment, if price takes out the previous weekly high, we continue up. If price pulls back, then we try to buy at demand. Everything between is just digestion and chop. You'll notice here we are also on an inside week. So again, look for the inside and up versus the inside and down. You know what to do. The 9 EMA is confluent with the 23.6. Not exactly, it's a little bit above, but there is confluence there, but that is about 1,000 points down. The 23.6 or the 9 EMA will be a target if bulls lose their momentum. Same definition as before. What does that mean? It means they pop, can't make a new high, they drop, then make a new low, then we continue down into or around these levels. The 38.2 is also confluent with an inside and up formation. Now that is some distance below. That's about 2,000 points. Again, these are not things I'm looking for this week. I'm just pointing out on a weekly chart what we're seeing here. Okay. Next chart is going to be your shorter time frame, which is the 4 hour. Sorry, the daily. And again, there's no change here. Same thing. We came up, we hit resistance, we got close to resistance. We are making lower highs, higher lows, just kind of a sideways trend, if you will, for right now. So digestion, again, going into that short week. I know I keep repeating myself, but I just want to make sure everybody understands. We need to build a base above the high or above that pivot high before I start to feel like, hey, we're actually going to continue to the upside. To the 4 hour, let's talk about that. This is your 4 hour zone for this week. Note the levels, put them on your charts. We did hit the 2 hour supply zone to the tick. I can't make this shit up. I mean, we hit it, it came back down. That's exactly what we teach. And if for some reason we break down below that, your trendy edge is here. You can see a pop at 19,787. And if for some reason this low doesn't hold, look for price to come into either 19,623 by 19,484, where I would expect some buying. Okay, so that is the ES and the NASDAQ. And then one last thing, I want to bring up Bitcoin because I do think it's important. I like to trade off of Bitcoin. Sometimes I trade the micro Bitcoin futures. And then, of course, names that are, like Mara. There's a handful of them. You guys know what I'm saying. But this is what I've been seeing. This is the same chart I've been using. Everything's worked so far. I had put this, weeks ago. Price came into the trendy edge, came into a demand zone. There's the inside and up formation. It popped just like I wanted it to into the cloud. The cloud was resistance. It rejected there, and now here we are again. If for some reason we take out the low, I believe the better clearance rack, if you will, or the better place to get long is going to be in this green zone. I believe right now you're just on what we call a relief bounce. If you do not know what a relief bounce is, go to my YouTube page. Just type in relief bounce, and it's going to give you a short video on how to trade relief bounces and what I look for in order to understand, hey, this is not a real bounce. Just trade it as you see it, but the bigger move comes when we get to here. All right. So that's what I got for you guys this week. Again, I really appreciate you. Thank you so much. Can't wait to kick butt with you tomorrow morning. Have a great Sunday. We'll see you soon.